Hello and welcome back to FFS for Finance's Sake. I'm Rachel Chadwick Harrison, Chartered Accountant and Managing Director of Chadwick Accountants and Bookkeepers Limited here in Warwickshire, where we spend our days helping real business owners deal with the reality behind HMRC's bright ideas. And welcome to this latest episode of FFS. Our topic, MTD, the sole trader trap and the hidden cost nobody asked for. Yes, I mean making tax digital for income tax. And I'm joined by someone most of our clients already know, the friendly face of the firm, the one who hears everything first, Tara Weston. Tara, you're basically the front line of client conversations. What are you hearing?
Honestly, it's a bit of a mix of panic and complete confusion. We're still getting people walking through the door saying, I've just heard about this MTD thing and does it apply to me? And you're thinking, we're days away from this kicking in. How do you not know?
Because let's be really clear, we have told our clients multiple times, emails, updates, conversations, we've gone on about MTD again and again, and yet people are still unaware. So that tells you something important. The message from HMRC, and frankly from parts of the profession, it's not cutting through.
And people assume that they'll be told properly, but what actually happens is they find out when it's just too late.
Yes, and we've seen this exact scenario before. It was the same with the people earning over 100k who don't realise they need to file a self-assessment. No warning, no real explanation, then suddenly, fine, lands on the doormat. And MTD has that exact same you should have known trap.
And it's made worse because people misunderstand what actually triggers it. They think it's profit.
They do, and it's not. It's turnover, gross income, your sales, your revenue, whatever you want to call it. It's that top line. So you can feel like you're not making much money and you're actually still getting dragged into MTD.
And landlords are going to be hard by this because a lot of them right now aren't making much or anything at all.
Exactly. High interest rates, big mortgages, rising costs. Plenty of landlords are actually making a cash loss. But if their rental income is over the threshold, they're in the MTD trap. It's wild because you've got people who aren't making money now being given more admin.
And more cost.
Yes, let's call it what it is. This might not technically be a tax increase. It absolutely behaves like a hidden tax because suddenly you have got software costs, more time spent on bookkeeping, more reliance on accountants, more pressure to stay organised, and all of that costs money.
And time, which most small business owners just don't have.
So true. And the idea that people who currently struggle to submit one return a year, and we have a lot of those, they're suddenly going to do 4 quarterly updates and a final submission. It's optimistic at best.
It's very optimistic.
Now let's talk scale, because this isn't stopping at one group. We've got that 50,000 threshold coming in now. We've got the 30,000 threshold coming in April 2027 and plans for 20,000 from April 2028. So it's not niche. This is a slow rollout up to a huge chunk of the population.
Which means people are thinking, not my problem, probably need to think again.
Couldn't say it better myself. So let's get into the controversial bit. Why is HMRC actually doing this? Because the official line is efficiency and better records.
But it also gives them a lot more visibility.
Very true. More frequent data, earlier insight into income, less delay in seeing what tax is coming their way, which, depending on your view, is either smart modernisation or a very effective way of tightening control.
And either way, the burden still sits with the taxpayer.
Always. Now, this is where conversations with clients have got really interesting because some are asking, can I just avoid this altogether?
And that's where the limited company discussion comes in.
Very true. So let's be clear. MTD for income tax applies to sole traders and landlords where that property is personally owned by them. But limited companies, they're not currently in this regime.
So if you operate through a limited company, you're still doing annual accounts, corporation tax, but you're not doing quarterly MTD submissions for income tax.
Correct. And your income personally from a limited company will come through a mix of PAYE and dividends. And those are outside of the MTD for income tax.
Which is why we've had quite a few clients saying, I'd rather incorporate than deal with this.
Yes, we're definitely seeing a behaviour shift. Not because everybody suddenly loves running a limited company, but because they don't want the MTD admin burden.
But, and this is important, it's not a one-size-fits-all solution.
Exactly. Going limited brings different tax rules, director responsibilities, additional admin of its own. It's not always the most tax efficient option. It's definitely one worth discussing with your accountant if you are caught in the MTD trap, though.
Yeah, so it's a planning decision, not an escape button.
Perfectly put. Now, whether you stay sole trader or not, let's talk about what people should actually be doing now.
Okay, so first, know your numbers, not your profit, your gross income. And if you're near the threshold, you need to be tracking it properly.
Second, fix your process. If your bookkeeping plan is sort it once a year in January, that approach is finished.
And third, look at your software early because you will need it.
Fourth, speak to your accountant right now. Actually plan. Who's doing what? Who's filing quarterly? How is this going to work in practice?
And finally, don't assume that you'll be warned because you might not be.
So let's wrap it up. MTD is coming. Awareness is still shockingly low, and a lot of people are about to be caught out. Some will adapt, some will pay more, some will restructure their business and avoid the admin.
But the worst position is not knowing until it's just too late.
Exactly. So if you take one thing from today, don't wait for HMRC to introduce you to MTD via a penalty notice, because by then you're already behind. Tara, thank you so much for coming on the pod and for bringing the frontline reality of what clients are actually saying, because honestly, that's where the real story is.
It's always a pleasure, and I think that it's one of those topics where the earlier people get their heads around it, then the better.
Absolutely. And to everyone listening, if this has hit a nerve or you're suddenly thinking this might be me, don't ignore it, because the worst place to be with anything tax related is behind. Just contact your accountant or contact us at admin@chadwickaccountants.co.uk. This has been Rachel Chadwick Harrison of Chadwick Accountants and Bookkeepers Limited in beautiful Bidford-on-Avon. Until next time, FFS, check the numbers.